Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Hope you're all doing well. We've had some pretty nice trading in the Trader Lab. And if you're visiting Trader Lab today, well, you may find what we discuss and the work we do in Trader Lab is something that might be helpful to you in your journey. And take a look. Let's kind of draw our chairs up. Let's focus right now on what you're about to see. This stream is about integrating Bookmap OrderFlow tools with auction market theory, using the volume profile as a chassis in the intraday developing time frame. The market, so you guys understand, is really not an indicator-based process. It's really much more a participant process. And if we understand market behavior, which really is a reflection of participant behavior at times, we might be able to get in alignment with it. Most of us use plug-and-play indicators in multiple time frames. It's all wonderful, of course. However, if you don't understand how the market works, you might not really be able to deploy those tools. It's kind of like putting the cart, as they say, before the horse. All tools can be applied, but if you don't know when to apply them and when they're in alignment, when they're not, then you're just trying to be a mechanical trader. And mechanically trading, at least what I've found, is just random as far as the outcome because there's no edge. So maybe the idea might be, and this is what the Trader Lab is built on, understanding market mechanics, how the market works, why it does what it does, and how at times they get in alignment with it with structured trades that you can reverse engineer and determine where these trades show up and what are the conditions and do they have a statistical edge. And the thing that's very difficult for us, being mere mortals and with emotional wiring and primal wiring, fight and flight and all this kind of stuff, this is very difficult for us. And the things that are in our best interest are really counterintuitive. And I want to underline the term counterintuitive because intuition is not suspecting what is going to happen. It is the behavior that takes place that is primally wired. So that's intuition, fear of loss, revenge trading, all this. If you want to call it intuition is really also primal wiring, DNA, and many other things. So we'll talk about that today, but let's get into today. And a lot of this has to do with what we did on Monday. And you're going to see how the market works, why it does what it does, and how at times you can get in alignment. And like everything in this business, general disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is really based on helping you understand how the market works. And then, if you see something here that might resonate with you, you're all invited to the Trader Lab, and the Trader Lab is a no-cost community. It's a full-time chat, and the idea of Trader Labs to help traders learn to differentiate fantasy from the reality of the business, to create vetted trade plans where they only interact with the other participants when they have a statistical edge, and the rest of the time you're a tourist. This is not a video game. This is a business of edge. It's same business as casinos, the way they operate. They only play games with an edge. Why would you sit with the gamblers when you have a choice to sit on the side of the table with the house that only plays games with an edge? And yes, they do pay the gamblers. We also pay. So you have to get over it if you want to be in this business. If you can't deal with it psychologically because you don't want to pay, well then, how can you own a business? No matter what it is. Think about it. And if this doesn't make sense to you and you're all about playing an adrenaline game or for a dopamine fix, the wrong business. So if you are interested in the business, that's what the Trader Lab is for. Now let's get going. Let's take a look at the higher time frame, as I call it. Maybe. Okay. This is Monday. And we were in a consolidation on Monday. And on Monday, and I did not stream yesterday, these were the key locations. 71, 80, 80 was the high volume up in here. 54 was the week low. And in 2 days here, and I think we tested this with the ETH low, and I mentioned, now, if I mention something, it doesn't mean anything. I don't think that doesn't exist here. I just want you to know, your egos have no place in this business because it's random. You have to detach. But what we can do, if we understand how the market works, we can get some general ideas of what is it doing, what's it trying to do. And if it's not doing it, like go up, and we have a tail here, and now we're consolidating, and this yellow line here is the retail price, and this is Monday, can't remember the days, and we just tick this low, and then we're holding the 54. That was our key outside location. And then it's whatever it does, it does. Now, I wasn't here yesterday, but let's move a little further along. Now, let's look at something interesting. Now, this is Monday. Let's look at what happened Monday. So this is our trend day up, our breakout, new all-time highs. We have continuation. We get excess up here. We close here. Let's just look. And the volume point of control, that orange line represents the high volume. Remember, this is shopping. The next day, we open, we go higher, and we basically pick stops under the low of day. And the market comes back inside. This is balance or two-sided trade. The retail price now is up here. Maybe we're going to go higher. Wouldn't that be nice? Now, Monday. What do we do on Monday? The buy stops are above this high. Let's remember, sell stops are below this low. If the market is going to go up, often what it does, it takes out the weak longs and then comes back across the range. And it closes up here. What does that suggest? Maybe we'll go higher on this day because maybe we just took out the weak longs and now motorboat along. Here's the high of the day from here. What do we do here? Again, Monday, open higher, take out the stops above this high. So what do we do here? Took out the sell stops, took out the buy stops. Here's something for you astute traders to think about. What does the market do? The market goes down to go up. The market goes up, and we take out these stops to go down. Now, right here, and remember, the 54 is our over-under. And this is all on Monday. If we get under 54, hasta la vista, and then we're looking at 14 and wherever, we'll start with that. So on Monday, we open, take the stops, and then we start this rotation. Now, this is all important because this leads up to yesterday and today. Isn't that interesting? So we take the stops. Where's our buyers above the buy stops? If it's only stops, those are weak shorts being taken out. And then we rotate and we break below the retail price here, the fairest price. So this becomes too high and this was too low. Well, if I break below it, this sets up short. And we were talking about 85 and 80 being important prices here. And now we close down here. Now, no clue, right? And we close on the low of the day. What does that do for us? 54. Now, let's go a little further. This is the higher time frame. What did we do? We took out the stops, which I was just showing you over that previous day's high. This is day before. This is yesterday. Pick the stops. And where do we come? We take out 54, which was our over-under. And it's the Acapulco cliff dive, which is what I mentioned in the stream. And where's our potential targets? 64.19, 64.14 is the primary target here. So this is yesterday's behavior. So what did we do? Pick the high, got the shorts out here, took them out. Thank you. We're going to send you a coupon to the buffet. Get under the 54, hasta la vista. We'll send you a postcard from the edge. And then where are we trying to go? Now, this is the end of yesterday's RTH, and we closed here. Notice where the fair price is. We've rejected all of this. We're under that low volume area, which is, let's just remember, the low volume area is here. Once you fall out of this, It's we'll catch you later. We'll see you over here. And if we don't like it, we'll keep going. And who knows? By the way, where's the next target down here? 70. You notice the location, 70. Whoa, it's down here. So 70 is the next target. Now, you say, really? Yeah. Now, let's look at today. What do we know? It's a great question. What do we know? RTH open, 33. Let me show you the levels again. I spend time here, and you're going to say, well, let's get on with it. I know. 33.5 is yesterday's RTH retail price. So what that tells us is the market did the Acapulco cliff dive, and all these little consolidations or auctions are too high. So where you see that node sticking out, these high volume areas, it's like shopping in your store. I'm not paying that after we take the stops. Rotation. Oh, that's too high. What do we think of this? Get out of here. Oh, I'm out of here. You notice the market's just moving. I'm out of here. Oh, 32.5, 33 retail price. Outside edge is out in here. If we rotate, yesterday's low, a potential target. I'm going to give you statistics. This is a target, and then south of the border. Now, statistics. We're opening. Now, again, guys, what I'm doing here is I'm showing you a process of trading. Now, is it right for you? No clue. You have to vet it. And this is what the Trader Lab is about. But 33 was the retail price, right? So we are opening, and the settlement's here. So we're opening lower, and there's yesterday's low, inside of yesterday's range. Now, I have to give you a statistic. Grab a pen and paper, and you have to vet these for yourself. You know, everything I do here and share with you, there is no mechanical trading. Wouldn't it be nice? If you think anything is plug and play, wrong business. If it was that easy, we'd all have ATMs in the basement. Let's be realistic. What do we know? Here's the statistics. We're opening lower inside of yesterday's range. This is the highest volume from yesterday. Think of it like shopping. That's the fair price. But are we done? I don't know. What is this? The ETH fair price. It's lower than there, which means we're not paying that. Fair price. Yesterday's low. ETH low. Here's statistics. Write them down. So we are opening lower inside of yesterday's range. Statistics. Trader Lab document section. You have to vet. 97% probability we take out either the ETH high or low. I don't know about you. What do you think? Let you guess on that one. 87%-ish taking out the previous high or low. Well, what do you think? Yesterday's high or yesterday's low? Do you feel lucky, as Dirty Harry would say? ETH volume point of control, the last retail price, 80% probability. The previous point of control, that's this, highest retail price from yesterday's RTH, 68% probability. And then taking out the first hour's high or low, 98% probability. So this is the first hour's high. Who knows? Is everybody tracking so far? How are we doing? Is everybody with me? How are we doing in YouTube? And thanks for visiting Trader Lab. Hope you guys are doing all right. All right, let's keep going. So we have our RTH open. This is too high. This is the retail price, and high probability here and there. So let me ask this astute group of traders. Do you want to get long, or do you want to look for short continuation trades? What do you think is in alignment with the direction of the market? And what about the statistics? Do they suggest long or short? Now, I don't know, but I can tell you for me, no longs. And I'm not saying that's a good plan. I'm just saying it's the one I got. So, shorts. Now the question becomes, where do I get short? A wonderful question with no answer until hindsight. How do you like that? Wouldn't you like to get short somewhere? Here's my plan for today. Not saying it's a good one. I'm not saying it's anything more than what I do. And we're all different in our sense of our groove. And what this is, I get asked a lot, what is this auction market theory? Well, it's shopping, and it's how the business or the market works. It's what's too high, what's too low, what's fair. And the reason we have rotations in the market is the market's trying to figure out what's too high, what's too low, and all quote fractals or time frames, as you think of them, or rotations. Might not be a fractal. We've had this conversation by pure definition, but think of it like Russian dolls or Matryoshka dolls. It's a vertical integration of consolidation. And a consolidation is really a what's too high, what's too low compression. So buyers and sellers on both sides and volume in the middle. And this is like a consolidation right here. So too high, too low. Volume is right there, and if I leave it, it's now too high. I'm just showing you this is like what a trigger would look like. But in multiple time frames, this is the retail price for the whole day yesterday. This in here is the retail price for right here. So in a vertical integration, this is the same. It's called mean reversion, underlining the term mean. So what is this? In the ETH, this was the mean or fair price. In yesterday's RTH, this is the mean, and here's settlement. My first trade for me today was to look at this and short it for continuation from yesterday. Why? We did the Acapulco cliff dive. What is that? A change. What else do we know about the market? We just had new all-time highs, and we consolidated. What's under the consolidation and under 54? That's where they jump off the cliff, the Acapulco cliff dive. And then what else do we know? The market is long. What does the market do? Write this down. The market goes up to go down, and the market goes down to go up. In all time frames, all rotations, it's the same. It rotates over itself. Why? Because there's always stops on both sides. So if the market gets you know how you look at like a rubber band gets stretched out, it's going to counter rotate over itself. And the traders on the other side of the trade, they are going to get squeezed. It's just the nature of the beast. So first trade is here, looking for a short. So that's me. Doesn't mean it's good. Doesn't mean it's right. By the way, what are we trying to do with this thing? We are trying to get an alignment. And in the Trader Lab, it's about structured trades that are vetted. Vetted means you know where your trade will show up. You don't know if, where, when, nothing. You just know maybe. Write this down. In trading, the best you have is maybe. This is not a business of prediction. I understand. We, quote, psychologically, we want to be right. We need to get the approval. We want to avoid risk. We don't want to get bitten. And when we step in the market, we are wired to avoid risk. Primal wiring. I call it Hyde. Hyde's a lunatic. Primal wiring. Is there a saber-toothed tiger behind the tree? Oh, I don't want to look. I don't want to find out. I want to be sure there isn't. Let me look for certainty. Where's certainty? Well, if I put a lot of indicators on here and draw a lot of lines, I might get more certainty. What happens if you're trying to solve for certainty and you're in an environment where there is no certainty? Then maybe you got to solve for something else. How about this? Have you ever thought maybe you got to solve for randomness and not certainty? And by looking for certainty is actually a recipe for potential non-sustainability. So my first short's up above, okay? How do I get short? Well, right here, what do I see? Here's what I see. I see buyers here. This is delta. And I see buy stops going off up here. Okay, that's the 44 and the 8. Now, I have no clue. I'm looking to get short. And here, this is my developing volume point of control. This is that yellow line that I'm showing you in multiple, quote, time frames. This is the retail price, and the one above is the retail. This is the developing retail price. This is trading in multiple time frames, as you want to think of it, or a vertical integration of Matryoshka dolls, because everything fits inside of itself. And I see our shorts are still percolating here, though annoying. Let's look. So here's We get some short covering here, buying iceberg. This is stop divergence. It is a indication. I don't use indicators, so it is a indication, not indicator, of behavior. So if I have buyers going up, which are stops, which are shorts, and I don't know where, so not my job, I have no clue. My sellers now get below my buyers. My buyers and my volume is here. This is microstructure. I'm going to draw a few little things. Now, this is not a trigger for me. You know, my jaw's on the ground with everybody else here. I'm going, I can't pick the high of anything. So I don't have that skill. It's not my job. But right here, what do I have here? Buyers. So I have buyers. Support is there. Microstructure. Buyers. Going to the moon. Sellers are here. Buyers were there. Buyers are here because I made a new high. Sellers are here, but I don't know at the time. Don't know. Buyers are here. There's my upper movement. Buyers are here. This is outside edge of a consolidation. I'm going to show it to you, just a little something for you to think about. This is now structure, and it's not actionable yet. For me, I'm just sitting here going, what am I going to do? I asked the question because I don't know the answer. I know where I'm going to trade, but it has to get the location. Trading is like real estate. Location, location, location. If it doesn't come to your location, now let me show you what happened here. This little node sticking out is a high volume. One moment. Lovely. 1 second. Getting a target get taken over here. 1 moment. Sorry, guys. I got to manage the store here for a moment. 1 second. Okay. Sorry. Just moving some things around. So this is too high. This is a break. This is where the buyers were. Notice the behavior and the test. It's also mid in VWAP. Now here, I'm chomping at the bit. But I also know if right here, I can come across and squeeze and come up to the level. So right here, I have nothing to do, and the lunatic is going out of its mind. VPOC migration. So this is too high. So I'm thinking to myself, oh, well, but what do I know? This is my next location. And if I found too high here now, which I didn't know until hindsight, now my next location is here. And I have VPOC migration. This is the same as this retail. But if this now is too high, I know I may have found too high, and this whole thing is being rejected. That's what I know. I don't know after that. I don't know. But now let's look over here. Variable high volume node in a market. I follow a process. Not saying it's a good one. It's just the one I do. And I'm also very patient. If I don't get my trade, which would have been up in here, but didn't happen. If I don't get my trade, what happens to me is I'm emotionally triggered. I'm going, you shoulda. Now, who's talking? This is Hyde. You shoulda. No, you shoulda nada. Because over time, random behavior on my part will take me out of the business. So instead, I've learned by paying a lot of dollars for the or tuition to just wait. Wait for my trade. Where's my trade? Well, if this is the retail price, and now this is the new retail price, just follow the logic here. What is it saying? This is a foreign language. And again, sometimes we don't understand foreign languages or it's muddied. So what is this? Too high. What was this? Too low. If I'm under it, what does it say? Maybe too high. If I come back to it, and this is now in multiple quote time frames. This is now too high. This is too high. This is too high. What can I do with this? I can sell it. Okay. So for me, I'm slow. You know, this is my first short. And 14 is my target, by the way. Here. Okay. So this was my first short going for 14. This is a continuation short. And I think 70, let me just try to get down here. 70, wherever that is. Did I miss 6? Where am I? I'm kind of getting a little confused. Let me just see where I am here. Here, this is the target. Primary target. And there's other trades in here. I just want to show you. So this was the target for that trade. Done. Now there's more trades. Before I go further, do you guys have questions? Now, how we doing, guys, in YouTube? Hope you're getting something out of this. Please give a like. This is the Trader Lab, and we're coming back to the 70. Now, let's look at some further information. Hold on one second. I got to make some adjustments to some of these levels that are getting exported at the moment to Bookmap from IRT. They're a little too sensitive. Let's try this. This is showing me each of these high volume areas. So I only want to see the ones, so at the outside edges, these are called low volume nodes. And really the way this works, these are consolidations. So as the market auctions, it goes up and down the food chain. Okay, so let's look here. What do we know? This is the last retail price. So we're going to mark it as it's going, okay? Variable high volume node. So that's what I do. I mark these things. Because what do they tell me? I'm not paying that. New retail price. Let's mark this. Now I'm going to show you some more trades, some more shorts. These are structured trades. Now, when I say structured trade, these are trades you can take and reverse engineer. It's not what I do. There's traders in Trader Lab that'll be taking chunks of these. In other words, trading these shorter rotations. You know, I tend to trade broader stroke. I take stops. Not thrilled. But I try to, you know, other than my emotional response, which everybody has, what I try to do is just take my trades and when I respond emotionally to stops, I just acknowledge it. In other words, why aren't we going to feel? We are. So you can't stop your feelings. Now, let's look at a few other things. This is still too sensitive. Still got to make some adjustments. Let's see what this looks like. Okay, one moment. I'm just making some adjustments because I'm in real time now with you guys, or will be, and I want to make sure that we can see everything the way it's supposed to be. Hold on, just lost something here. Hey, YouTube. Guys, if you're in YouTube, feel free to ask a question. I'll do my best. I can't see your questions at the moment, though. Too high, current retail price. This is reflecting these distributions. So where are my next trades? I'm going to already tell you where they are because this is part of structured trading. I have something called the IB continuation trade, which is a short, potentially to come down here. I have also, so I have a short in here. And so there's a couple things here. One is a short to continue. The other is a reversion trade to come back across the range, which is not a long for me. It's a trade management tool to come back across. And then I'm going to be looking for shorts out here, out here. So I have two locations, a short to come back here. It's called mean reversion. And we always joke in Trader Lab, yeah, it's mean. So let's watch. So the target on the short, which I showed you, at least for me, others may have gotten short sooner. This was the primary target. So now we come down here, but there's another statistic you wrote down. At 9:30 Central Time, the first hour, we have something called the IB stat. The IB is over a 90%, closer to 98% probability we take out either first hour's high or low. And based on the lay of the land, we're going for this. So I have a couple of trades in here. I can be taking this as a short continuation trade to take this out, which I think I posted in Trader Lab. I did actually. This is interesting. Let me tell you what we're talking about now. The trend is down. I think we might agree. Now, what are continuation trades? How do they work here? If I get my target and 9:30 Central Time has a high probability, 98%-ish, and again, vet it for yourself, to take out either the first hour's high or low in a downtrend, I'm leaning here. Does everybody agree? Also, this is a primary target right there. Isn't that interesting, you say? Is it random? Well, yes, but what else is it? It's based on the fundamentals of the market. What was too low previously? This, shopping. Now, if we test a key location and we come outside, what is this called? It's called mean reversion. The primary trade in Trader Lab that I suggest developing traders make their own. In other words, you become expert at one trade. This trade shows up everywhere. And just so you know, when we're coming back here, this is the mean in a higher time frame. So if this is the mean in the developing time frame, think of this vertically like multiple time frame. If I come outside, I'm coming back here. If it works, that's the mean. But in a higher time frame, this is the mean. I'm coming back here. So I'm trading the same process in multiple time frames. So the outside edge is here. There's the liquidity. There's the icebergs. There's 70. So what might I do? This is called mean reversion, underlining mean. Let me show you the trigger. So we have liquidity. We have location, outside edge. It's there. Okay? So if I know this is retail and I cross it, now we're going this is the fair price. This is too low. Location, naked volume, point of control, IB low, over 98% probability, take this low out. I don't know about you, no longs, looking for continuation shorts, mean reversion. Let's look at the trigger. Let's look at the entry. Let's look what happens next. This is a structured trade. It's part of those 60 PDFs I've shared in Trader Lab. Let's look at it now. What does it mean? What do you do here, Tom? Well, I'm coming outside, and what I know is it's out in here, not where, but maybe outside. Why isn't the market going up with this buying? Let's look at what you got right here. Buyers, liquidity, selling icebergs, no clue. Sellers get below the buyers. Why is the market not going up? It's because we have passive sellers, and this is absorption. When you're using a high tier order flow tool, you got to understand how it works and what you're interpreting. There's no indicators here. What this is now is, I call this the tip of the spear. So it's kind of like when you're in an area and you're looking to come back here, where's the outside edge? Well, I always say good luck with that. There's no precision. What we know is this is an outside edge. Sellers are here. Liquidity is here. Sellers are below the buyers. That's the first suggestion that maybe we're at an outside edge. Sellers are here. Buyers are above. So we got buyers here, sellers here. Sellers are there. We make a lower low. Looks like we're going lower. Sellers are below the buyers. So what do we know here? Sellers, that's absorption. What's happening here? Absorption. Why isn't the market going up? Where are the buyers? See them? Here. So there, all these are buyers. All these are sellers. Why isn't the market going up when I see the buying delta? The passive side is absorbing. This is absorption. Break low. The sellers are making some progress. How are these buyers doing? Not so much. I got my liquidity here. Let's look a little further. This is a consolidation. So sellers, buyers. What's it going to do? I don't know. Do you know? No, I don't know. Well, let's kind of look at some behavior now. Let's see what it does. I don't know. Tom, do you know? No. What do you think? I want to get short for continuation trades. Why do you want to get short? Trend is down. Context is down. Oh, is that why you want to get short? Yeah. Where are you going to get short? Good question. Where are you going if you get short? This is called mean reversion. Here and out the bottom. Stat. Over 98% probability. What is this? This is a short. Your stop goes up here. Scale. Then you're going here and out the bottom. Let's look at the behavior. Watch. Scale. So, short here, scale, scale. Now you put your helmet on and you're going for this 98% probability. This is trading in this is trading the auction. This is the Trader Lab. You guys getting something out of this? Anthony's, there's only one side trade here. There was no real value yesterday, and we were trading the outside edge of the distribution from yesterday. This is the outside edge from yesterday, 35 and 32.5. There's no value. This is not value. This is the only area where we stopped and really consolidated. So this is where the shorts were going to be for today. Remember, 54 was the Acapulco cliff dive moment, and then we have 14, 16, and then it was lower somewhere. And then it's just these targets below. So no, only shorts, unless you have somebody has a counter trend plan. I don't. I just I get in a Barca lounger and I just do my thing. So what is 70? So 70 is the target. What is this? If this is too high, where might we go? Back here. So this is a reversion trade. Now, if we came back across, it would still set up shorts. We come down here. Now we're under here. We have another trade here. The 70. And this is called an IB continuation trade. And it's just a structured trade. And I always want to say to traders, the outcome of every trade is random. With a trade plan, you are already stalking your trades because you know where they might show up. You don't know if they'll show up and you don't know the outcome. What is this? 70, break. What is this? The first hour's low. Structured trade and Trader Lab is a short here. Right here. You have a sweep. So this is a short continuation trade. If it's in your thing, you have a sweep here, which suggests the rotation. You have a sweep here, which suggests the continuation. This is a short. Anywhere in here is a short. And your stop needs to be above this little microstructure, which is, let me explain. You're going to like this, maybe. What is this? What is this? Tom, what are you looking at here? What is this? What is it saying? What is the language? What's the language? Too high, absorption. Let's look. Buyers are here. Sellers are under the buyers. I'm out of here. You got to be crazy. In micro, this is too high. In developing time frame, too high. This is for the whole day. This is right here, right now. Like a convenience store. Sellers take control. The buyers were here. The buyers are there. Absorb. See you later. Leaving the store. Now what? Consolidation right here. Sellers are here. Buyers are there. Micro high volume is right there. Break low. I'm not paying that. Chop, chop. Break low. Where's the micro volume? In there. Hasta la vista. Thanks for playing. We'll catch you on the rebound. Where were the buyers? Where did they get run over? Right there. What is that set up? That's an outside edge, subject to how you use this. That's a short. That's a short. That's a short. Stop is either here, which is really a shoehorn stop, or here. Not saying it's a good idea, just saying it is what it is. Now, you'll see the sellers here. and I have the sweep. This sweep says counter rotation. Teeth chatter. Oh no, I'm going to get stopped out. I'm going to bail out, right? Is that what's in your head? I'm going to get stopped out. Who's speaking to you? What's the voice in your head? It's Hyde. It's that one who has fear of loss, of course. But guess what? What does that fear do for you? You're going to either still lose or you're going to bail out here because emotionally you went from euphoria to fear. Euphoria to fear. What is that? Chemicals in your brain. How does that work in this business? Not good. Where's our over-under? It's here. Sweep. What does that suggest? South. Sweep here. What does it suggest? Rotation. How far? Clueless. What do we know over here? Sweep. What did we do? South. What do we know here? Sweep. What did we do? South. Sweep north. Sweep south. Trend down. Do you feel lucky, as Dirty Harry said? Where's the over-under? It's here. Where's the low of the day going to be? No clue. Is it my job? No. Is it yours? No. What's this? Sweep. Where's my resistance? I'm going to show you a little idea here. And all of this has to be vetted. And you don't need any of this. This just comes from some experience. Now, sweep here. What do we know? Key. What happens here? You take it out. Hasta la vista. Thanks for playing. Now what? Now I'm going to show you some more trades. I'm going to show you a stop also. I took a stop. Oh my goodness, he takes stops. Huh. How you guys doing in YouTube? Do I trade gold? Personally, no. But using this processor, you can trade any liquid market. Gold, NQ, pork bellies. That's the NQ. Or any market with liquidity. Crude, doesn't matter. Silver, it doesn't matter. Currencies, I've used this on all different time frames. Swing trading, you can use it for options. You can use it for anything as long as you vet it. ETFs, all the same. This is how the market works, you know. Now, what the market does, hey, you know. So now we come across, now VPOC migration. So let's talk about the language here. What does it say? Isn't that what we use indicators for? Google Translate. Well, I don't use indicators. I threw them all out the window. And that was very hard to do because I did use indicators for years and then built systems, which are indicators on steroids, right? And created my own indicators and all this stuff. Many years, a lot of wasted years trying to get something to work. And I didn't understand why it didn't work because it always worked randomly, but it wouldn't hold up. It would always fall apart statistically. So, and then I went on a regimen of optimization because I thought, well, I was building systems. They were pretty complex, you know, wrote code and all that. This is a long time ago, in DOS. So it was quite a years of work. And to start letting go of stuff like that and acknowledging that all those years that I couldn't extract something was very difficult. So I was very slow to change. It's the old thing. Well, this works sometimes, and I'm comfortable with this. Yeah, well, my comfort is really Hyde fed, not based on the business. I didn't understand, and it took me a lot. Nobody told me when I started in 1980 this is what was going on. There were no off-floor traders. Once we come across here, and we come across this, no shorts here. Now it's looking for continuation shorts. So now I have to look at the next trades. I'm going to show you the next couple trades. I'm going to come up for your questions. We have two structured trades in the Trader Lab now. And they're outside in trading. They're called mean reversion. One is out here, VWAP to here, which would be a short. And then outside mid. Let me tell you when I talk about outside. What am I talking about? Yeah, I know. What is he talking about? This is an outside edge. So this is like a distribution, and that's what it is. I'm not paying that. And then we have down here. And if we fall out down here, then this is our outside edge coming back up. And we have a structured trade called VWAP to VPOC. It's a reversion trade. And we have two locations for this trade. We have this, and we have out here. And the idea is to find outside and then come back. So that's a trade. It's called mean reversion. So let me show you.
Yes, by size 318.0.
I took a stop. I'm going to let you know I took a stop. And, okay. Here's what this is. This area is where I was looking for my short. And the VWAP at the time was here, not over there. This is current right now. And this is at the time. Okay. So I took this. Here's the trigger. So I had liquidity, and this came in the book. So this was my protection. And I thought to myself, well, I have my trigger here. Remember, here's my microstructure. This trigger, micro high volume is here. So I took my short there, and I put my stop here. Okay? So not a big deal, other than the disappointment, emotional attachment to getting paid. So right here, I took a stop. So now I have another location. I go, okay, I guess that one isn't any good. Where's the next location, Tom? Here. And the outside edge up here. So now I have another location. And I also know there's stops. We have the full session VWAP and we got our mid. So I took a shot, took a stop. Okay. How nice. Now where am I coming? My liquidity starts running in here again. I haven't forgotten what happened over here. And I'm looking for a short. I get my sweep. Now remember the behavior. We get buy sweep. We're looking for a counter rotation. So this tells me, look for your trigger. Where's your location? Out here, and your mid is sitting there. So I've got location. Think real estate. And clueless. Why are you clueless? Because I have to be. There's my trigger. Took another stop. Okay. Now, VPOC migration, and no more trades for me, okay? This is your high volume. So I took 2 trades, and I took 2 small stops. It is what it is. Now I have this consolidation, and I'm done as far as my own trading, but I'm back here at a low volume node, and I get VPOC migration. This is suggesting potentially that what's below me is too low. So now I don't have anything to do. I'm just, because now what you're seeing is the volume point of control is shifting higher. I'm over this previous, so it's changed. So now 2 small stops, that's it. So me, park a lounger, nothing to do. I can trade rotations if I want. In other words, if I choose to, I can trade like this to this, but I'm here streaming. This might be a trade I would take, but it's not really a structured trade. So nothing to do. This could be a trade if you vet it. I find if I'm looking at an idea and I take 1 or 2 stops, then I'm okay just, sitting back and let things develop or be done for the day. It still is quite a nice day for me, just with a couple of trades. Yeah, see, here we go. So this is a microstructure. Let me show you this. And this is not necessarily a trade that you guys ought to do, but I want to show you what's going on here. What I was trying to do at like the VWAP is to come outside and rotate down. It's called mean reversion. Come out to the mid here and rotate back down. And then it gets squeezed out. Now you come out here, and now out here is also a low volume node. The problem now with the trades, so you understand, is we're making higher highs, higher lows. So the trend may change, but when I mean by trend, it's still a downtrend, but the short might be over, and we have FOMC coming out today, minutes, right? And the market is selling off ahead. So it could be long liquidation. We don't know. You go into that report and whatever's going on, you put your helmet on. I don't trade those things. I trade after. Just me. No, I have no compulsion to trade. I have more compulsion to take what I call intelligent risk versus gambling. I always think of gambling like going to a casino for entertainment, get the cocktails and the ticket to the buffet, and, leave X amount of dollars there, and I had a good time. Maybe see the show. They got good shows at the casino. So let's look out here. So I get through the mid. That was my last short. And now I'm sitting here going, Now, if I was still here, I'm looking at the sweeps. Same thing I was looking at here. So it's not like you see a sweep. It gives me the sense of where a rotation might happen. So I have this, but let's look at the location, outside edge. What I've been trying to do is come outside to come back in. That's reversion trading. And you don't know, and the mean thing about mean reversion, and there's a little joke about this, mean reversion is mean, because the challenge with the mean reversion is where's the outside. So the reversion is to come back inside. So it's outside in. So you could be going outside in, take a stop. Outside in, take a stop. And then it's up to your trade plan, Now, this is a trade I would take, but it's not necessarily a trade anybody ought to take. I want to identify it as the structure. Let's look at structure together. Now, in this chop, which is a consolidate, and nobody knows, right? Where's the high? I don't know. There's my sweep. I got a sweep there. I'm looking for a counter rotation. I get another one here. There's my rotation. I come up. Now, that doesn't mean get short. What it means is maybe now we're going into chop and consolidation. Don't know at this point. Absorption here, break low. So what do I know? I had the sweep. I got sellers here. I got sellers here. There they are. I come back up. What's going on here? Absorption, break low. My high volume is in here. I'm going to draw a little box around this. Now, the fact I'm drawing a little box or something, if this isn't your trade, you're just, hanging out here and working on your crochet. There's nothing for you to do. But let's look at the structure right here. So what I know is my buyers are here. There's the sweep. There's the counter rotation. Remember what we're looking at. Sweep, buy sweep, counter rotation. Sell sweep, counter rotation. Support, don't know. What's too high? This. VPOC migration, two possibilities. I know, brilliant. This, back to there, or this. When I break here, you could be selling this, stop over here, or stop over here. If you're aggressive, just saying, you could be selling this with a stop over here, or in here with a stop over here. There's less structure here for you. Outside edge, high volume, break below, too high, fall. This is now the next higher time frame retail price. Under here, put your helmet on, going there, and then lower. And this is where you'd be trying to go with this. If you took this, you'd be risk neutral, and then you're managing the trade. And if it comes back here above here, this trade is definitely over. Trade's over. That's that. Now I'm current. So a couple stops for me, no big deal. Oh, the primary trades accomplish their objective and then some. That's trading. I don't know what else to tell you about it. No holy grail, no secret sauce. Marg is asking me, day trading with Bookmap is too crazy and it's good to swing trade only. Well, it's a function of how you execute. Mark, for me, Bookmap, I call it the tip of the spear. I'm using the order flow and microstructure and the delta. So in here, I'm really using, this is an order flow tool. It is not a standalone product. You need all the other pieces to know where you will trade. And then you kind of open this up, and now you get into nuance and minutia. That's where we're trading, is here. But everything is overlaid on a chassis. So when we come in, if you're in the Trader Lab, you know what you will do. You don't know what the market's going to do. That's part of the joy. but we know what we're going to do. We knew 54 was too high. And by the way, guys, review this and review Monday's stream, because Monday lays out yesterday and today. So this is the thing about understanding how the market works, auction market theory. This is Monday, and 54, and this is all explained in Monday. This is just Monday pre-market. And then Tuesday, let me just see if I got this right. Tuesday. My brain is gone because I wasn't here yesterday. You miss a day and you don't know what day of the week it is. So 54 was our support. And this was tested in ETH lows. And I showed this on Monday's webinar, why this 54 was like really the the holy grail of what? I don't know, 14. And then 70, right there. 70 was the next target. And then whatever happens down here happens, Anyway, where's our current low? I don't even know where it is. Let me see if I can find it. 62.75. So we got under here a primary target, and we still have 58, and we can keep going. 46. We can go wherever. It's not our job to worry about it. It's not our job. Our job in the Trader Lab is to get in alignment. This is yesterday. So you see, once we got below here, this became too high. 54 was the over-under, and then 14 was the primary target. We didn't get there yesterday. Boom, we got there today. 70 is the next target, and then under here, and nobody knows. Again, who knows? I don't know. You know? No clue. You see what I'm saying? Anyway, this is how does Bookmap fit into all this? Everything is in, I call the volume profile a chassis. Outside edge. Now, if you're a scalper, which I'm not, you could be operating and trading these microstructures. I don't bother. Too much trouble. Too much potential for stops. Oh, you don't want to take a stop? No. Why wouldn't I? Why would I? So if I'm going to trade, I'm not in this, I got to get every rotation. Here's what happens. Is this the right place to get short? Is this the right place to get short? Is this the right place to get short? Pick one. What do you think? Now, this is important right here. This is important. And remember the 64.14, key location. This is like a volume point of control in an intermediate time frame. In other words, the yellow line. So subject to what we get here, I can come here. I can come up there. I can come back here. We'll see what it does while I'm visiting with you today. And thanks for visiting Trader Lab. Guys, if you're interested in the business of trading, I'm not saying this will solve the issues that we all face in a random environment, but if you can organize your business around a plan that has a statistical edge, does that give you the potential for sustainability in a random environment? Let's accept that you can't predict anything here. And if you don't accept that, that's okay. But I'm going to say this is not a business of being right, and it's not a business of prediction. It's a business of alignment and then probabilities. We can take 3-4 losses in a row and be a profitable trader. You can have a 30% win rate, be a sustainable, profitable trader. If you understand how to work the numbers and how to trade. If you make errors, you're basically throwing dollars out the window. I talk about this a lot in Trader Lab. And over the years, I've talked about something called the error cost calculator. Have you ever added up all your errors? Well, what are errors? Trades not taken, fear, FOMO, bailing out, moving your stop, revenge trading, all of them, right? Making it up, impulse, all the errors. Put a number to it. How do you deal with if you're short? Euphoria, depression. What do you do with that? Now, this is not but I'm saying is if it was, I'm going to bail out. I'm going to get stopped out. What's going through your head? And by the way, you might get stopped out or it might come here. Do you know? No, you can't. So why would you predict in something you can't know? Where's that voice coming from? It's coming from the lunatic under the hood, fight and flight. The lunatic, hide, is our primal wiring. And it was really good back in the days where you had to bring the carcass back to the cave but you didn't want to go find out if there was an apex predator behind the rock. So you operated in apprehension. We do the same in fear, because this primal wiring cannot differentiate between this risk and the apex predator. It's the same. So the chemicals now are released in your brain to generate behavior or fear. Do you know that? Well, this is what we work on in Trader Lab. How do you get control of yourself? You get control of yourself by metrics, knowing that you have an edge and just not trading until you have a location and an edge. And then whatever happens, happens. Where are we trying to go? Well, there. Initially. And what is this called? Mean reversion. Is this a trade anybody ought to take? No. But what about this? What do we know about this? Might we want to get a scale ahead of this? And it's not a short. I'm just giving you an example of a trade somebody might take if they have it vetted. What is this trade? What is it called? Trader Lab, what is the name of this trade, potentially? Yeah, Lee, it's possible it's a reversion trade. It has to be vetted. You know, reversion is mean. That's the problem with reversion. You can put this thing, you could be taking this, get stopped, take that. I mean, I don't know. I can't say what to do. Some traders are going to take this, other traders are not going to take it. But what we know is we may have found too low, because this right here was resistance. We're above it. So it might be too low. If you get short out here, this is the first location for a potential scale. Then you get this, and then, it can do whatever it's going to do. Or it's just going to keep squeezing. I'm going to give you the ors, because that's all you got is maybe. Write this down if you're visiting today in YouTube or even in Trader Lab. And by the way, there's a link in the bottom of YouTube if you're interested in the business of trading. I'm going to disappoint you and say there's no holy grail. There's no plug and play. We all wish, okay? Don't we? Don't we wish we could take indicators and time frames, and then they move that ATM in the basement for you, and you just go down at the end of the day and collect? That's the fantasy. The reality is vastly different. The reality is you not understand how this thing works and also accept randomness. So if we are in an environment that's 100% random, 100% of the time, and it is, now you don't have to accept it, but we all look for certainty in an environment where it doesn't exist. If the casinos could have figured out certainty, they would skip the hands where the gamblers win, right? So how do we skip the trades where we pay the other participants? We don't. Instead, we have to teach ourselves to appreciate the opportunity and to understand all businesses have overhead and cost of production. There isn't one business anywhere that doesn't pay bills. So if we understand that, then we can just kind of go, oh, okay, is this too high? There's my trigger. There's my test. This is a potential short, or this is a short up in here. Your stop is up here, and this is your first obstacle. It's to get scaled in front of this. There is enough range. What do you think? Now, and why would we scale here? Well, there is your scale. Then this is support. If I get under there, I got that. If I get under here, I've got my buyers are here. I can sequentially operate in this. Now, this is more advanced. You never have to be trading this. This is much more advanced because you're kind of operating out in the ozone here a little bit without a lot of structure. There is structure, but we are kind of, it's possible we've done our thing. And with the FOMC coming up at 1 Central Time, everybody might be covering. I don't know. Do I know? Well, I know what it might do. Do I know what it will do? No clue. There. Is that a problem for you? Well, I'm going to suggest you got to get over it, because every moment is unique in the market, and all we are doing is trying to get aligned with the participants. What do we know about this? This is now support. Break high, support. Support. Now, if I get under here, I come here. So it goes like this. If this is too high, outside edge, what we're trying to do is called mean reversion. Reversion trading is outside in. The mean in this fractal or time frame is here. This is the highest volume so far today at the moment, and it moves around, as you noticed. It was lower. This is now the quote fair price. Buyers and sellers are doing most of the volume at the moment right here. So if this might be too low. If I get out here, I can take this and I'm coming here. That's my scale. My stop stays up here, and if it takes this out, I scratch the trade, or my broker sends me a gift basket. Or I hold, and if I get under this, which was too low, this is support, then I go here. It's as simple as that. If I get below here, I can then come down to the next level out here. It's a sequential process. Too high, outside edge. I'm not paying that shopping. Retail. And then where's the outside edge coming the other way? Let's look at it. Potentially, if we get under here, we have these sequences. We can come here. We can come back here. This trade is a short to there, to there. And this is a structured trade, but it's more advanced. I just want you to know. And guys, if you're following this stream, and I encourage this to all of you, if you're not a profitable trader, I'm going to suggest, and we all have profitable trades. This is really, I call it the catch-22. Random behavior has winning trades. Plans without an edge have winning trades. Gamblers have winning hands. It's the same. Now, the fact that the gamblers win doesn't take away from the house still paying the gamblers, but the house creates profitability by only executing hands or games that have an edge. If we understand that we're in the same business, then our job is to only play games, if you will, or take trades that have an edge. And we are going to pay the gamblers, same as the casinos. Write that down. What is the business you're in? You're in gaming. You're not in prediction. You're not in being right. You're not in the business of fear. You're wired for it. And you're not in the business of knowing what's going to happen. Say Laguerre, sorry, Charlie. It's not the business. So now we need to kind of rewire our thinking and our beliefs. You may believe that you can find certainty and confirmation. Is that word in your vocabulary? You're not in alignment. Your beliefs are what motivate you to find something because you want to avoid risk. We're wired for it. It's okay. However, that's not the actual business you're in. If you're trying to solve for certainty to avoid risk, of course, and loss, that is not the business. And it sounds like, well, this is semantic. No, it's not. It's not about not taking stops. It's about edge, because you're still going to take stops. You can't avoid it. What you want to avoid are trades that don't have edge. Only take the trades with edge, and you're still going to take the stops. So can you see why this might be a trade with edge? And maybe not. What's the key piece here? Well, yesterday's low and 14. We know that. And what's this? This was support, break high, held it. It's if you get short here, you're coming here, hopefully, to get risk neutral. Then if I can get below this, it sets up this. It's if this, then that. If not, then what? If this is too high at an outside edge, if this, oh, I'm not paying that, then what? Then potentially back to the retail price. Too high, retail. If I get under here, then where? Well, potentially either there or there, somewhere, and that somewhere is, I don't know. So if it goes somewhere, I need a trade management process, because why? I don't know. Do you know? I don't know. So if you know, you come to Trader Lab, clue us in. In the meantime, if you know you don't know, you're no longer responsible for being right. You are responsible 100% for having a vetted trade plan that is shown over a random distribution of outcomes that you have a statistical edge. And even though you're going to take the stops, oh no, and pay the other side, oh no, you still, if you're following a plan with edge, over time, in a random distribution of outcomes, you're going to get paid. You may only scratch this trade subject to your trade plan. Remember, if it doesn't get under here, hasta la vista, more squeezeteria. If we get below here, then south of the border. If this is too high, then that. If I get below it, then that, and maybe out here. If not, if I can't get below this and I've got absorption here, then what? Then potentially back here and squeeze. Do I need to know anything else? How about this? Can I know anything else? How about no? So I know what I know, and I know the rest I don't know. Doesn't that relieve me from being right if I'm following my plan that has an edge? Doesn't it also say, this is interesting, what's going to happen now? If it comes here, I scratch the trade, and my broker's going to send me a dozen roses. The other part is, if I just test this and I'm risk neutral, now I can hang out, and even if I'm running a 2-lot, my next target is here. Has it stopped me out? No. Is this trade going to be profitable? Yes. Much? Maybe a 6-pack and a large pizza. Or if I can clear this, it can become more meaningful. Maybe just the VWAP. And you don't need any more of this. I'm just saying, you need to watch the key areas. Where might we get the other side? If I get below here, I might get a reaction here. I might get a reaction here, full session VWAP and VWAP. Where do retail traders keep their stops? Some are going to be under here. Some are under this swing, which is the full session VWAP. I want to watch locations. And then I can just blast out of it per my plan, not my fear. And then maybe here. And again, no clue, right? No clue. Let's watch and see what it does. You guys have questions. This is the Trader Lab. You're all welcome to the Trader Lab, guys. Do I have your settings to show only large orders? I see you have low colors. My chart shows that. Yeah, I've filtered the heat map. I don't care much about the algos. I care about this, the resting liquidity and the behavior, because this is really important. When you run into behavior like here and you break above it and hold it, that could be a reason to get out of a short if you're a short. It also, subject to the condition of the market, could be a reason to get long. It's these are order flow triggers. Separate conversation, not mechanical. There's more to this, obviously. And you can learn this in Trader Lab. The key to understand, guys, Trader Lab's serious business. It's about the business of trading. It's a community of like-minded traders who come together to leverage their collective experience. It doesn't matter how you trade, by the way. There's no right way. There's only edge. It doesn't matter. Now, some of us think, well, I only do such and such. You go, you scour the internet, you find, all this stuff that says the only thing you need. It's all nonsense. And if you've been doing it and you're just trying to replicate what somebody else does, garbage. Sorry, don't want to be offensive. If you do what I do, garbage. But here's the difference. You come to Trader Lab, you're going to see how other traders have taken these concepts and reverse engineered them into their time frame, the way they trade. Some traders are going to go from here to there and then maybe have a runner. Other traders won't even look at this. They're going to be back in the Barca Lounger waiting for lunch to arrive. It doesn't matter. You see, it absolutely doesn't matter. You could just trade this to this if you have an edge. You could be trading this, back to here and this back to here. It's all the same. What is your trade? The question is your trade, not my trade, not some influencer's nonsense. If anything you see, you have to vet. That's why I say you come to Trader Lab, you can extract your groove. What aligns mentally. This mental alignment, this is why you can't replicate somebody else. And even then, most of these influencers are showing you ideal scenarios, in hindsight. We used to see them all the time in Futures Magazine. These guys would take out full page ads and they'd show, something or a system or something in color with all the arrows. And then there'd be that disclaimer, hypothetical, past performance, blah, blah. Well, I do the same thing here. But of course, they want you to buy their idea. And most of these influencers have all these affiliate links. They're making dollars off you. Good. Pay them. The fact is, if you're not a profitable trader, why don't you just say, put the brakes on, call a timeout. And if what you're doing is not working, I call it waking up in the same place. I did it for years, called Trader Groundhog Day, because I would take ideas, I'd have random winners, and I'd go, I just got to make it better. And I was doing it with a mix of time frames and indicators and custom indicators, and then trading systems. And systems are just optimization or curve fitting on steroids, no different. So if you're looking at a big move like yesterday and you go, well, if I adjust my MACD or my stochastic or throw my Keltner, pick one, whatever, or my Fibonacci, boy, was it wonderful, hit it right on the head today. You're just doing what other retail traders do. And I'm going to suggest, because everything works sometimes, you're trapped in randomness. You're trading noise. You're not trading edge. Everybody has winning trades, gambling. Everybody has winning hands, gambling. But are gamblers sustainable? No. Are retail traders who gamble have sustainability? No. That's why the failure rate is so high. What are you going to do differently? Keep doing what you're doing, trying to fix it, Trader Groundhog Day, or go, wait a minute, maybe I'm trying to solve for the wrong thing. Maybe you need to solve for randomness and you're going to take stops instead of looking for certainty and taking stops. You ever thought about that? We all take stops. So do you take a stop with confirmation, or do you take a stop in a random environment when you have an edge? Which one of those over time is going to potentially give you sustainability? Gambling, taking stops, or trading with a statistical probability that favors you, taking stops? Which one? Ask yourself the question. It's the most important question anyone is going to ask you today. Because if you don't have an edge, you absolutely, in my opinion again, based on my observation going on 46 years, will not be here. And why would you choose that when you can choose something else? Again, you have to vet it, you got to think about it, and you have to ask yourself. Because all the gurus, all the influencers, most of it isn't worth the powder it takes to blow up. Now, there is value in some things, of course, and everything works randomly. But you have to kind of chart your own path. And that's what the Trader Lab is about. It's not about me. I'm just like you. I've just done it longer. And I've gone down, and I spent more time in Trader Groundhog Day than hopefully any of you ever will. So I learned the hard way. And when I started trading, all my buddies were floor traders. There were no off-floor traders. We didn't have the internet. We didn't have PCs. This is where I started, classical bar charting. So I have a bit of experience. I also have, unfortunately, the other side of that equation was there was no information. So it was either a book or go to a seminar. That was it. Well, how do you learn to trade out of a book? You don't. That's all I can tell you. So Trader Groundhog Day was where I kept waking up. And eventually, and it was not easy, many years, I threw all indicators away, all Elliott wave, all Fibonacci, everything gone, because I learned, even when I learned market profile from Peter Stottlemyre, who created it, and that was in the mid 80s, I couldn't trade with it. This process you see me doing here, I couldn't trade with it because I had to learn more about market mechanics than I did, and I had to create trades specifically for the behaviors I was observing. I still, even though I had a book and I sat with Peter Stottlemyre and learned this, I couldn't trade with it because I still had my indicators. I said, well, I'll put these together. This will be really good. No, not so much. Created more conflict. And I found, instead of having more to create certainty, that the solution was stripping it down to minimum inputs. So I had no ambiguity. I had a process, and it was if this, then that. So if it does this, then that. That's it. And then where? Triggering structures and minimum inputs. If I have a minimum input that is always the same in a random environment, that doesn't change. Now I can measure it. If I have a structured trade and it shows up at the location and I have these minimum inputs, and I don't need many, I know I can take a short here or up in here. I know my stop is here, and I know this. I know this. I don't know the outcome. Am I better off taking a short here with a structured trade, scaling here, and then holding for whatever, and it is all it is whatever, than with minimum inputs, which is minimum, location, condition, trigger, same thing, right? Scale, helmet. Am I better off? And if I take the trade, here and take a stop, wherever it is, and I take a stop, am I okay with that? Yes. Do I like it? No. What is liking? Emotions. What about my emotions? Thanks for the emotional stimulus. The lunatic comes out of the cage because we're wired for it, and I have to detach from those messages that are very powerful because they're chemically induced, because in this business, in this environment, they have no place. I can't stop them. I have to acknowledge them, and by keeping the error cost calculator, which is available, thanks Greeny for creating that in the Trader Lab, if you start putting in the trades you don't take, the trades you bail out of on a counter rotation, the thing you move your stop to break even, but it's not in your plan, and maybe moving your stop to break even takes you out of trades that would pay you, even though occasionally it gives you profit. See the randomness? We remember the randomness when it works. We do not remember all the trades we bailed out of or scratched that went on to 20-point winners. We don't remember that. The psychology remembers the time that it saved you a point, not the times it cost you 20. Have you ever quantified the cost of errors versus the random outcomes of responding to the lunatic who has no clue? I measured it for me many, many years ago, and it was so abhorrent. I wrote a check out. And let me just put it to you this way. $10,000, $20,000 a month thrown away. Would you keep doing that? Well, if you don't quantify it, how do you know? Do you think those journal entries change your behavior? No. Make it tangible. Write a check out. Put it on your monitor like I did. That will motivate you. Does that make sense, guys? Are you getting something out of this? How are we doing in YouTube? Hope you guys are getting something out of this. Let me show you what the Trader Lab looks like. It's a community of traders that have come together. It doesn't matter how long you've been trading. This is the business. It's Stottlemyre. J. Peter Stottlemyre. Oh, thank you. Who put that in? Trade plans. There's a sticky note trade plan. This is the Trader Lab, and there's a lot going on. Trades, posting, discussions. What is this one? Oh, about Bookmap. Everybody's in here. We all pull the oars together. We're all trying to move in the same direction. And it doesn't matter what you're doing. What matters is that it has an edge. We have to leverage. This is advanced trading concepts. Now, advanced doesn't mean complex. Everything I do is very simple. If you know how to walk down the aisle in the supermarket with a shopping cart, you have the fundamental basis of trading. You probably never thought of it that way. Maybe you have, but that's all this is. We're just shoppers. That's all we are, shopping. So you know how to shop? When it's on sale, you throw a few in the cart. If the price is too high and you're a seller, you say, oh, really? Here, have some more. If the price gets too high and you're a seller, oh, have some more. Where do we go? There, and where are we looking to go? Here. This is the mean. Now what? We get under here, south of the border. We don't get under here, reversion back. How complicated is this? Oh, Tom, it's random. Oh, that's right, I forgot. It's always random. What's there to forget? Nothing to forget. So this is the Trader Lab. Pre-market prep. You need to detach your emotions from the market. Emotional stop versus a vetted stop is the same thing, but one will take you out of the business. Thank you for posting. And I'm posting in the morning, and I'm here to kind of try to keep you centered as well as everybody else. If you were taking longs, then you need to get to work on context. If you took counter 10 trades, you need to get to work on context. If you FOMO'd, you need to put hide on a leash, the lunatic. So this is Trader Lab, and there's just tons of stuff in here, guys. And this is the library of webinars. Start with this one. It is the primer webinar. It's got about 34,000 views. It's about an hour. It just gives you a high-level overview. It talks about anchored inputs. What's an anchored input? It's playing a game exactly the same way. So blackjack in the casino, same way. Play the cards the same way. They don't change the number of cards. They don't change how many times they cut the deck. They don't change anything, right? Why would you be changing the game and making it up? Meet the Trader Lab. This is an advanced trader methodology. Now, advanced is simple. Here's the thing. What is advanced? You actually got to learn how to trade. Sorry. You're going to have to learn market mechanics. How does the market work? How do you trade this thing? You want to learn how to trade? You might be able to accomplish some of that in TraderLab. Not saying it'll work for you. Here, the holy grail of trading. Does it exist? No. But how close could you get? Well, for me, this is the holy grail of trading, but that's just me. I'm sure there's others here that have other things that they consider. Stop gambling. Start winning. Trading multiple time frames, if you will. How do you determine all this? Why do most retail traders fail? And much more. And there's also a document section, the statistics you hear me quote. You have to vet everything for yourself. The settings in Bookmap for me. Opening context. The open. What is that? How do you gauge the open and then the behavior? There's many different elements. So there is no plug and play, and this is not a shortcut. There is no such thing. You want to be at a high level in anything, whether it's trading, a sport, speaking a foreign language fluently. I think of this like language. This is language. Indicators or translators, okay? What does it take to learn to speak a foreign language fluently? That's what you need to get to in this. It takes time and intentional practice. Also, you only need one trade, one structured trade. You can learn it in the TraderLab, just one, to develop something called proof of concept. In other words, you build a template of how to build a trading business. You prove it to yourself that you can do it. And that you need one trade because you have to define one trade and then develop the discipline, not only to do the work to get the edge, so you know what the probabilities are, you have to develop the trade management for it, and then you got to develop the courage to actually use the result of that work, the statistical probabilities, to actually develop the discipline to execute in spite of your fear and uncertainty, which we all have, in order to extract the edge. If you can extract the edge with discipline out of one structured trade, that's all you need. Now you have built the foundation piece of potential sustainability and build a business. Are you interested in that? This is what we do in TraderLab. There's no secret sauce. There's no holy grail. And you got to roll your sleeves up and be willing to change what you believe this business is. Remember, ancient mariners thought the earth was flat. They would not sail to the horizon because they believed their truth was they would fall off. Well, it took somebody with courage to sail to the horizon, and then the beliefs of the collective changed. Right now, most retail traders believe they can predict what the market's going to do, and they're using indicators, quote, confirmation, so they have certainty, which is really another way of saying to avoid risk. You cannot avoid risk no matter what you do, but if you have edge, you can create outcomes that favor you. And over a large random distribution of interactions with the other participants in an environment that's 100% random 100% of the time, if you have edge and you can execute it, you tell me why you can't have a sustainable business. If it works for the casinos, why wouldn't it work for you? That's the message, and that's always going to be the message here in TraderLab. Why should you gamble? And what's that doing for you? If you're interested in sustainability, and I can't say you will achieve sustainability because there are pieces you have to do in discipline. You got to calm down, calm yourself out, and understand you're playing in the major leagues. If you want to play on the court with the pros, you got to become a pro. You start it one step at a time with humility and understanding why other retail traders fail, and you've already paid your dues. The question becomes, are you going to keep paying, or do you want to get a yield on that tuition? You can keep repeating the class, or you can choose to get a yield. That is trapped equity. We all learn from our experiences, but at some point we have to choose whether we're going to keep repeating the class or whether we want to get that trapped equity out. Please give a like on the way out. Remember, this stream's available to review in YouTube. Also, be sure to review Monday's stream. It lays the foundation for yesterday and today. Thanks so much for visiting TraderLab, guys. Appreciate your interest. Use the link in the bottom of YouTube if you want to visit the TraderLab community. There's no cost for it. You won't be solicited or abused. You do have to confirm your Discord username. keeps the spamulators out, which I'm sure you can all appreciate. And then I look forward to meeting you in the Trader Lab. And I want to thank all the Trader Lab participants for making this maybe one of the top chat rooms in the futures industry, and for all the support. Thanks again, guys. Look forward to seeing you tomorrow.